You are listening to ChartingWealth.com. It is great to have you with us on this Friday, the 9th of October, 2015. And we are talking about where the market has come and where it is going. We always start with IYY. That is an ETF, an exchange-traded fund that tracks the entire market. Why do we care about that? Well, we like to see what's happening in the micro later, the macro first, and we're going to look at what the big trends are and where things are going. We have the blue line that we can see on our charts. Those of you listening by audio, I'll tell you what we have. We have a 2-day trend line connecting just 2 candles, and that is 4 days in total. We had a crossover going up on the MACD. That is the indicator, the prime indicator that we use at Charting Wealth. It is a great indicator. The one we have set up is phenomenally good. If you would like to have our charts, please make sure, we'll tell you at the end of the show how to get those for free. Give you our layout at freestockcharts.com. Easy to use. Get it right to you. You can use it every day and follow the markets with us. But we have a crossover going up between the 1st of October and the 5th of October. Again, those are 2-day candles. Over the past weekend, we saw what happened on Friday and then how the markets opened on Monday. We had a crossover on the MACD. Right after that, the derivative oscillator, which is the only other real indicator that we look at, crossed over. We pushed through the 30 and the 34 period moving linear regression lines, and we have seen for the last 8 days, that's 4 2-day candles moving up. We've got a trend line. We always like our trend lines to connect 3 candles. We don't have 3 good candles connected right now with the most recent up moves, but we are in a confirmed up move on the big chart. You'll also see in just a moment on the small chart, we do have a purple line that is somewhere around about $100.80 or so. It is where the market moved up to on the highest day in the last few weeks. That was the 17th of September. That is around the time of the Fed meeting where they told us they were going to hold off increasing the interest rates because things weren't looking as good as the market at some point had expected them to, and the market consequently rolled over for the next 8 days down to its bottom on the 29th of September, and then it started bouncing up again. What we are looking at is the ceiling that we have drawn here going to hold? And that is important to pay attention to. We're still seeing that ceiling holding on the 2-day chart, and we drop back on the 4-hour chart. We also see that it pushed a little above it and then settled below it, even on the 4-day chart for the end of the day. It continues to move up, but it's not moving above that. We do have a 2-day trend line. We always like to see how that plays out on the 4-hour, the half-day chart. It is continuing to be the movement, price movement is above the 2-day trend line. Now, the short chart, that is the half-day chart, crossed over going up back in the afternoon of the 1st of October, and it has moved up fairly steadily except for a little bit of a down move on the 6th of October and has continued to push up. However, the derivative oscillator is losing some of its speed, and we don't really see a big converging yet between the signal line, the red signal line on our chart, and the moving average convergence divergence indicator, but it's not getting any farther apart, and it is getting long in the tooth and high on the chart. So we'll continue to watch to see if the market's going to digest this next move and roll back over. We are very cautious on this up move right now. It does not appear there's a lot of legs in this market, but we are in a confirmed up move on the short chart and the long chart in the total market. Now we're going to range back out to our 2-day chart, and we're going to switch over to the S&P 500 as represented by SPY. That's a Spider S&P 500 Trust Series exchange traded fund. It looks very similar to the total market. Why? It's because it is 500 of the big stocks. So they represent a big chunk of the volume and the movement in the market. They crossed over going up between, just like we saw in the total market, the 1st and the 5th of October. We've drawn a 2-day trend line connecting only 2 candles. So again, it's not the kind of trend line that we feel real strongly about. You can listen to our training on trend lines. We like trend lines to connect at least 3 candles. then we feel better about that being a really solid trend. Look at, though, where the market pushed up. I will tell those listening, pushed all the way up to the purple line. We similarly to the IYY, we drew one on the SPY, and the market closed on this 2-day candle where it closed on the 2-day candle on the 17th, right the day of the Fed meeting, at about $200.08. So what's going to happen there? Well, the derivative oscillator's continuing to move up just nice and steadily. It actually just about doubled over the last 2 days in its upward movement. And we see that the MACD is continuing to accelerate in its divergence, that is moving apart. So it looks as if the SPY is continuing to push up. The price action is what's making us question, because it's stalling and stopping as of this 2-day candle at this same place where it stopped the up movement way back on the 17th. Again, things in the past mean things in the stock market. We want to see if that's broken. If that is, that'll be interesting. Now, the 4-hour chart did close a little bit above that purple trend line. And again, remember, the 4-hour chart is different than the 2-day chart. So what we're looking at is the price movement still above the 2-day trend line. Whenever that price movement cuts through the 2-day trend line on the 4-hour chart, on the 2-day chart, that means something to us. We can see on the 4-hour chart, however, the derivative oscillator is losing some of its speed, and just like we saw on the IYY, we really don't have a lot of divergence. In fact, we had a little bit of converging back around noon, and it spread back out toward the end of the day. So we're long in the tooth on this move. It's continued to move up fairly steadily, but still a little bit sideways. But again, nice movement up in the afternoon, so we'll continue to watch as the market moves into Friday. Now, we're going to range back out to our 2-day chart, and we're going to take a look at the Qs. What is the Qs? Well, of course, it is the Qs of the cubes. Excuse me, it is the Nasdaq 100. It represents the technology stocks on the Nasdaq. And we've again only been able to connect 2-day candles, so we don't have a good 3-day or more, 3-candle or more trend line, but we do have a trend line moving up. And again, we see the movement it touched on, just went a little bit above sometime intra-day, intra-afternoon. It went above the chart, the purple line, but it settled out below that. And we look at it crossing over between the 1st and the 5th on its up movement on the MACD, and we see that the derivative oscillator is still in an up move, about doubling on its movement on the 2-day chart as it closed out today. That is Thursday, rather. Now, if we look at what's happening, we can see that the Nasdaq really has slid sideways over the last 3 days. We can see that the derivative oscillator has been losing its energy as this movement has slipped sideways, but we can see that the MACD has also lost some of its divergence. And again, we say diverging, it means growing apart. Convergence means coming together. The reason that matters is when we see crosses in the MACD, that tells us that the price movement has had a substantial mathematical evaluation change, and it makes us predict bold up movements, or if it's the opposite, bold down movements. That's what we're looking for. So what we really saw in the afternoon is we saw the MACD and the signal line diverging, that is spreading apart a little further with this up movement. So we continue to watch that. Again, the price action is above the 2-day trend line. When it crosses over that, it gives us some idea that maybe things are settling out. And again, we'll continue to watch. The MACD's really had to slide sideways much more than the SPY and the total market. So it may be reaching its top. I mean, it has really held on to these numbers since back on the afternoon of the 5th of October. That was at the end of last week. So let's continue to, the beginning of this week. So let's continue to see exactly where this is going to take us. It could be getting long in the tooth and ready for a down move. Like I said, market doesn't appear to have a lot of legs here. So we're cautious in these up movements. But again, on all of these charts, On the total market, the SPY, and the Qs, we're confirmed up moves on both the short and the long charts. We're just watching this potential ceiling here as being where it's going to stop on the price action. Now, lastly, we're going to go back to our 2-day chart, and we're going to look at gold. Gold was down 0.51%, so about 0.5% for the day. We have been able to substantiate an up move. We've got at least 2 candles here connected, moving up on the 5th and the 7th. This candle on the 8th is in a down move. It looks like a bit of a hammer, but it's not a closed out candle yet. It's a 2-day candle. It's only drawn 1 day on the 8th. As you know, those of you who listen to us every day, the 2-day chart gives us an idea about a long-term trend, but gold has really been following our 4-hour chart so much better. And if you look at the 4-hour chart, it crossed over, going up again, a good money chart for us, crossed over, going up around noon in the morning hours of the 5th of October. This is Monday, and it has continued to, it moved up on the 6th, and then it started sliding sideways over the last several days. It's not crossed over going down yet, but we do see it coming together, or a converging, may very well be getting ready to move down. No substantial down moves yet. However, it does appear to be converging. Now, it could bound right back up again, but the derivative oscillators also lost a lot of its speed. So those of you who are paying attention to gold, hopefully you've already sold part of your position after this up move. It would have been a nice up move if you had gotten in right around before noon or around noon on the 5th of October, because we had that bound up on the 6th, but it's been sliding sideways since then. Still could have closed out even today with a nice profit. So be careful if you're in a virtual trade on gold. And remember, we always talk about virtual trades here. We are not a stock calling service. We are not giving you advice on actual trading. We encourage you to open up a brokerage virtual account at any of the online brokers and start learning to trade. Now, if you want to get the charts that we use here on the program every day, we have those available free for you, our layout from the good folks at freestockcharts.com. We'll be happy to send you our layout. The nice thing about Free Stock Charts is they're free. In addition to that, if you've not already taken our short 15-minute course on understanding what it is we do, that is understanding the MACD, understanding the derivative oscillator, understanding the price movements and the candles that we talk about, and the trend lines, and all the other things we use on the charts. If you have not gone over that yet, please make sure to simply email us for both of those things, the charting layout and the free training. It's just 15 minutes. It's a great webcast. You will really love it. We'll send both of those to you for free. All you got to do is email us, cw@chartingwealth.com. Again, that's C as in charting, W as in wealth, cw@chartingwealth.com. Thanks again for joining us. Hope that this has been a great week for you as we wrap things up on this Friday. Don't forget, we'll be preparing over the weekend, loading it up on Sunday night, no later than that, both the audio weekly review and forecast and our audio and video of the Monday program. So be sure to tune into all those. You can always sign up for our newsletter at chartingwealth.com. With that, we'll send you every day all of this information. So thanks so much for joining us. We appreciate you. We love to hear from you, and we'll be happy to send you all that information absolutely free. Wish you all the best in the markets from chartingwealth.com.